Palantir reported their Q1 earnings report. For those of you that have joined the live stream, you probably already know what I'm going to say in this video, but for all of you that did not join the live stream, let me explain what happened. Because despite the stock being down currently 7 to 8% or so, the quarter was a magnificent quarter. They completely crushed it. Now, if I'm saying this, then why is the stock down? Just doesn't make any sense, right? Well, if you actually look what happened throughout the day, the stock was up 8%. At the time of making this video, the stock is down 8%. So anticipation, expectations were extremely high. Also, the stock, Palantir stock, is up 25% since mid-April. 25% since mid-April based on what? Based on anticipation, based on high expectations. Another thing, you are playing here the stock market game. This is a company with a market cap of over $50 billion. Over $50 billion, EV to sales 18.1 times. PE ratio 70.9 times. If you look at the analyst estimates, they are expecting year-over-year growth for sales, 20% for each and every fiscal year up until 2026. With regards to EPS growth, a bit more there for fiscal year 2024, around 31% year-over-year growth, then fiscal year 25 and 26, another 20% year-over-year, which is tremendous. If you can compound that each and every year, I mean, the results will look quite good. But you cannot expect this stock to go up each and every day 8%, 10%, another 5%. Even though the quarter was a good one, right now it just didn't make that much sense, especially not if you're going to look at the results, which again, they crushed it, but seeing how much the stock is up already this year, year to date, 46%, since last year, 240%. So the only people that I can understand are angry is the ones that are holding options right now, that are playing the options, the earnings game, which again, if you're playing the earnings game, you've probably been winning already throughout the day, should have sold. The others, if you're a long-term investor, this is not exactly because, of course, it's down 8%. We always like to see green, but over the long run, I would much rather be able to buy more shares of a company at a cheaper price while also seeing every single metric of the company doing much better. Customer count going up, revenue goes up, margins goes up, free cash flow, etc., etc. Plus, by the way, they actually even bought shares this quarter. So for all of you that wanted share buybacks, they bought a little bit of shares this quarter. All the rest, they're still using the cash, still generating interest income. Now in the super high interest rate market, they're taking advantage from that. And I rather them do that than buy more stock at these prices. Plus, if the stock drops even lower, they can, of course, retire more shares for less money. Now, before I show you the numbers and touch on little comments that were mentioned during the earnings call, on the earnings call thing, it's extremely short, and in my opinion, it's a shame. I think they should invite more analysts to come on those earnings calls, even if they don't like them, even if analysts are bearish, I don't care. The more analysts that are on the call, the more questions that get asked and the more information we might get from management. This time it was Dan Ives and Mariana as always, plus some retail questions, and that's about it. It's a shame. More on that in just a second. If you enjoy these type of videos, leave it a thumbs up, subscribe if you have not. I only need around 400 of you or 500 of you to subscribe to the channel to reach 40,000 subscribers. So do me a favor, hit that subscribe button. I'm turning 30 on Saturday. On Sunday, you can unsubscribe if you want. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's quickly go over the numbers you probably already seen right now. So GAAP net income, $106 million, representing a 17% margin, 6 consecutive quarter of GAAP profitability, which of course, they are still eligible to get included in the S&P 500. Whenever that will happen, I don't know. Revenue grew 21% year over year, better than expected, and 4% quarter over quarter. As for US commercial highlights, US commercial revenue grew 40% year over year and 14% quarter over quarter. US commercial customer count grew 69% year over year and 19% quarter over quarter. By the way, if you start comparing Q1 to Q4, remember Q4's year-over-year comparisons were extremely favorable, Plus Q1 is a seasonally weak quarter for that company. And even with that said, right, if you look at the year-over-year comparisons here, they look quite good. Continue here with regards to government. I like that side. I think it still gets overlooked. I know we're all talking about commercial, but I think that government will surprise us. They already alluded it 3 months ago during that earnings call that government will reaccelerate in 2024. And we are already seeing that in this quarter. Government grew 16% year over year and just 3% quarter over quarter. US government revenue increased 12% year over year and 8% quarter over quarter. Customer count increased 42% year over year. We know customer count is a pretty important metric. The more customers they can attract, of course, the more they will spend with Palantir. And we hope that the same customers spend a bit more each and every year. That metric we're going to look at in just a second. Rule of 40 score of 57%. Rule of 40, pretty simple. It's combining revenue growth and profit margin should be above 40. Here it's at 57%. Then cash from operations, $130 million, representing a 20% margin, adjusted free cash flow, 23% margin, and then of course, plenty of cash, close to $4 billion. Now, the only issue here that the market had is probably with regards to guidance. Guidance was raised, but not enough. Expectations were a bit higher, so there is some weakness there, I guess, but they did raise something else as well. They're raising their US commercial revenue guidance to in excess of $661 million, representing a growth rate of at least 45%. Previously, it was at least 40. Now it's at least 45%, meaning could very well come at 50%, maybe even more, remains to be seen. They're also raising their adjusted income from operation guidance to be between $868 and $880 million. Adjusted free cash flow stays the same. Now, I do want to say one thing here. It's the fact that total RPO and billings, total RPO did grow year over year nicely. Quarter over quarter, not that much. And billing as well, it doesn't really move much, 1-2% or so. And this is one of the issues here. Net dollar retention was 111%. So we're seeing a reacceleration there. I believe last quarter was 108, quarter before 107. So there is some nice momentum with regards to that. But you would think that with regards to RPO, especially short term, that with all the boot camps that are happening, you would think that that number would be a bit higher. But then if you listen at the call, I think their sales team still needs quite a lot of improvements. Yes, we did hear about a 7-figure deal that happened after just 5 days. That's fine. But overall, if you're doing that many boot camps each and every quarter, usually you want it reflected in the numbers. Now, I know boot camps 2 quarters ago, 3 quarters ago, we didn't even know what boot camps were. So, of course, it takes maybe a bit more time until we all recognize that in the earnings report. But again, that's why you also have billings. That's why you have total RPO. There is a problem with their sales. They say they've got the best products out there. They've given the example with the anti-terrorist software. They were trying it out. Not a lot of people wanted it at first. But then I think they said by year 5, they all bought the software. They're going to try, and I think they're trying the same thing right now with regards to commercial. In my opinion, they have to try a bit harder because this is commercial, this isn't government. Yes, they're partnering up with hyperscalers, partnership with Oracle. I think this is a positive thing. I think, yes, putting Palantir Foundry in a sort of marketplace is also a positive thing as well. But overall for this quarter, very, very good quarter. They crushed it for a seasonally weak quarter. They crushed it on all metrics. I believe revenue per person, they said, is up 20%. It makes sense, right? If you're not spending more and more, but the business continues to grow and grow, you're going to see these results. But maybe they do have to invest in a sales force, right? Doesn't matter if you have the best of the best products. You want people to sign those contracts. If you look at the contracts for this quarter, or the deals, should I say, so they closed 87 deals of at least 1 million, 27 of at least 5 million, and 15 of at least 10 million. Of course, yes, it is down a bit quarter over quarter. But if we scroll all the way up here to the major highlights, with regards to commercial, they closed 136 deals. It's up 94% year over year. In the last 3 years, US commercial customer count growth is up by 12x. And so, the only problem here is, again, the stock. We've seen this with plenty of companies where the stock is the issue, not the actual results, not the actual company. The stock has run up quite a lot. Even the day the company reported earnings, it was up 8%. So now what happened? We're back to prices not seen since when? Well, since Friday. Okay, since Friday. So don't freak out. We're back to prices not seen since Friday. And even if currently post-market the price doesn't hold, the market opens, it punishes the stock a little bit more, then okay, then we're going back to prices not seen since what? 1 week? 2 weeks ago? Big deal. The 20, the 50-day moving average at around $22. And if we get the opportunity to buy it under $20, the 200-day moving average sits at $19.19. For long-term investors, what you want to see is continued execution, strong performance by the company, by management as well. And if the stock reacts negatively, then you get to buy a great company at a cheaper price. Again, for those that are trading options, which is completely fine, short-term profits, you want to secure them as soon as possible. Yes, the result was not as expected. But then again, you've got a huge green day that happened just before, so I'm sure plenty of you have already taken profits. Congrats for that. One last thing here for those that still need that reminder, Palantir is not like any other ordinary company out there. They work with governments, they work with the army. So if that is not your cup of tea, if Western values is not your cup of tea, if Alex Karp is not your cup of tea because you think other values are better, then this should not be your type of investment. Maybe you should try a company that sells pills or whatnot. So that's about it for me in this video. Do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.